The Bank of England has raised interest rates again to the highest point in 15 years. It's 4.5%, up 25 basis points, 0.25%. It's the 12th rise in a row. Now, the question really is this the fault of the Bank of England? It had one legal statutory obligation to keep inflation around 2%, and it failed. And if you look at the burst of money supply growth in 2020, as pointed out by Tim Congdon, you would think that it was the Bank of England that had created this inflation, that it then denied was going to happen and kept on forecasting low inflation until we were already hit by an inflationary problem. And indeed, Andy Haldane, the one person to blow the whistle at the Bank of England, moved on from the bank fairly shortly after. Nonetheless, it says that it still wants to claim inflation despite consistently underestimating what has been going on. Andrew Bailey said, "We have to stay the course to ensure inflation falls all the way back to our target." Now, this has been responded to by the Chancellor of the Exchequer, who's been very sympathetic to what the bank is trying to do.
Although it's obviously good news the bank is not now predicting a recession this year, it's very challenging for families with mortgages to see interest rates go up. But unless we tackle rising prices, the cost of living crisis will just continue, and that's why it is essential we stick to our plan to halve inflation, and if we do that, we can bring certainty back to family finances.
So the plan to halve inflation remains, but it must have got more difficult after what has happened recently, and any more deterioration will mean that the Prime Minister, Rishi Sunak, will miss the target of halving it by the end of 2023. And as the Chancellor was pointing out, the Bank of England has admitted that its forecasts were wrong. This really matters because although on this occasion it's good news that we will avoid recession, previously we have had forecasts that have led to governments making decisions, along with the forecasts from the ABR, that have actually assumed that the economic circumstances are worse than they are and has allowed the government less flexibility for tax and spending decisions than it would otherwise have had. Wrong forecasts from the Bank of England matter. They are not just yesterday's newspapers. And others, in spite of Bank of England independence, have been taking this as an opportunity to blame the government. The Lib Dems, as you might expect, have said, their spokesman, Sarah Olney, has said that it is the government's fault, not the Bank of England's. But the Bank of England, given independence by Gordon Brown in 1997, has the responsibility for setting interest rates. And that is why it ought to be taking the responsibility for having failed to meet the target that is set out in legislation. And we have to see now whether the hike in interest rates will be the last, whether there will be more to come, the effect it has on homeowners who are having to pay higher rates, on businesses that are finding it harder to borrow. Will the economy, in fact, slow because of these higher rates, or will prices simply pass through, which is the optimistic version, that the energy price rise is coming out, that the food price rises affected in themselves by energy will pass through, we're just lagging the rest of the world by a little bit, and therefore this monetary tightening's probably been enough and it will all be hunky-dory by the end of the year. It's very hard to know. It's even harder to know because the Bank of England's forecasts are hopeless, and the Bank of England has groupthink, and the Bank of England never seems to disagree on the MPC with what is being proposed.